All right. Top of the morning, top of the morning, top of the morning. He was, we have cooking this morning. See what we have cooking this morning. And so that ended up coming. It's nice. It's nice. That ended up playing out really well for the yen. That ended up playing out really well for the yen. Never hit my stop. Playing out really well. Overnight, that means the yen is still a little weak. I would have thought the yen got some of its strength back. I mean, I guess it doesn't mean that the yen does not have its strength. It just means that the dollar is still a little bit stronger, a little bit stronger. Get some tunes going, something to just have in my headphones. I'm gonna do probably some more white noise or some pink noise for about 10 minutes. Then we'll switch. All right, I'll do this for about 10. Switch it. News today. No like real news until a little bit later, which we can actually get into a little bit of the importance on this call today. Because the news that we have a little bit later is the FOMC minutes, right? FOMC minutes, the 10-year note auction, 17-week bill auction. Those are just government securities. I like to monitor those and see how the interest accrued for holding one of these securities, how that fluctuates, right? Because if that number goes up in terms of that interest or in terms of that yield that whoever holding that government security accrues, if that goes up, obviously that government security is more valuable, meaning that how I'm viewing that, if a government security becomes more valuable, then there's going to be more demand for that government security, which means there's going to be more money flowing into the dollar, right, to execute on that accruing of an increased interest rate for government security. So, but the FOMC minutes, there was an article yesterday that I actually posted in the Discord. Do this because you guys can't see my screen. I know you can't. All right, so in the Discord yesterday, I posted this right here. It could be a bigger event than usual, the FOMC meeting minutes. right. So let's look into these FOMC meeting minutes. Okay, let's see. All right, so that do its thing, and then the other thing I'm looking at too, I like to look at the JPY stuff just because I like to get a little more insight on what's going on with JPY. Right? If I get a little more insight on what's going on with JPY, then I can use that to my advantage. I can use that to my advantage when I'm trading on JPY, which is why yesterday, right? Which is why yesterday on this entry I had so clean. This entry was so clean. But the way this played out was even better, right? So this black line, when I moved into profit, right, I was in this trade all the way back here, right? So 531, I entered this trade, stayed through all of this. It ended up moving below. I ended up moving my a trailing stop loss. So what that means is when price hits a certain point, it'll just take me out of my trade in profit, right? Because I was in profit, right? But as we see, it ended up generating another decision making level or utilizing a previous decision making level just a little bit below from my position, right? And then kind of took off, um, which is just beautiful to see because what does this tell me? What does this tell me? This tells me that okay, the yen, right? The yen, it tells me that the yen is not strong. Is not strong, right? And the only reason why I was okay exiting that trade um was because I had proper risk in play. Like I didn't need um to allow that trade to go against my position to where, because you never know. Like you trust your analysis, right? But then you preserve your capital, right? Because I didn't know that this was gonna happen, right? And now so my stop loss before it was moved, right? It was somewhere down here. And so could I have just allowed it to move to my stop? Yes, I could have allowed that to just hit my stop. Um, but I was also monitoring this trade. I've watched it correct against my trade a few times, right? So I move my stop loss, so I'm in an infinite profit, and then I live with the result. Because in a different situation, the market's completely random. I don't know if this happens, right? You can't assume or have any type of FOMO for that happening. All you can do is the next time, right? I can do one of two things. I can approach it the same way I did. I can enter on a lot size just a little bit bigger. Like I was at a 1K units of currency. So if I do 2,000 units of currency, I'm able to take partials, right? And that's a zero point zero 0.01 to a zero point zero 0.02. I'm able to take partials, at least if I enter on a zero point zero 0.02, right? And then that way I can allow something to run, but we have to think about risk. Is it smart to double our exposure in the market? Is that even smart? Are we just trying to increase our profit? Because at this point, whoa, that's kind of a double-edged sword, if we do something like that, increase our risk. Not only do we have a chance to increase our profit, but we also have a chance to increase our loss, right? Increase our loss. Mm. Mm. All right, so let's do that. Let's look at this daily. I want to see this top. Let's look at this daily. Who? So that's an area that was being respected. I don't need that anymore. But this is what I've been looking for price to go hunt, right? This area of inefficient price action. It looks like there's a decision-making level that I have lined up in this area as well. So as we go down here, I'll look to see what I have at this level because as you can see, what am I noticing? What am I noticing? I'm noticing my volume, right? And I'm noticing just the level that we are currently playing within right now, right? So I'm noticing two things, the level that we are currently playing within and the volume down here, right? Because what could happen here, right? What could happen here, right? There's a lot that can happen here, right? There's basically three different signs that I'm reading um for us to completely sell off from here um or to continue bullish. That's the thing. I love building. I do I do have like my own sentiment about what price could potentially do. But I'm also not biased, right? So I like to understand the potential areas that price can travel in both directions and look at that, right? Look what's at that level, the decision making level, right? And so as we move closer and closer to that level, do something like this. I've gotten into this situation before where I have just jumped right into the chart. Maybe from like my analysis from the night before, or like when I was trading the day before, or something like that. Oh, that's just so clean right there, guys. That's so clean. I just love the way that looks. Volume never came back in substantially for buyers. But as we see that it kind of just it definitely accumulated. It accumulated. It left liquidity at each point on this way down. It took out more, took out, and now it left that point of liquidity. Right. So there's a bunch of orders sitting there that eventually, right, somebody's gonna have to come attack. Somebody's gonna have to come attack those orders. Um, and so I've made the mistake. What I was saying is I made the mistake of not spending more time on the top down first, especially when I'm just jumping on the chart, right? And so we're getting this good buy momentum right now from UJ. We're getting this good buy momentum from UJ. Let's check gold. What's gold doing? Gold falling? Gold is not falling. All right. So UJ, right? This is I am not gonna enter their trade yet. Um, for a few reasons I'm gonna show you right now because we are about we're about 50 pips away from a decision making level, right? 55.1 pips away if I were to enter a buy right now. I have a no trade policy for any time that I'm 50 pips away from a decision making level, right? 50 pips and lower. If I'm away from a decision making level, then I have a no trade policy. Okay, why? Because I've learned time and time again that you stop trying to trade through levels. Stop trying to rely on momentum, right? To move us through a level. Remember, I refer to the decision making levels in two ways. In two ways, they are either magnets, right? Magnets. Make sure I'm spelling that right. Spelling is an interesting thing. Mag. All right, I'm not crazy. Either magnets or they're force fields. Right? I love referring it to in this way because I like practical things. I like things that are practical. And a magnet, what's a magnet do? It attracts, right? Just like what we're doing here and what we think about when we're trading, right? We can attract success with our mind, right? Our mind is a magnet, right? Our mind is a magnet. And so whatever we think, we're attracting, we're drawing that experience or, you know, desire. Um, we're drawing that to us, right? What do force fields do? Well, force fields are just the opposite. Force fields keep things from moving through us, right? And so as price gets closer and closer to a force field, right, it's going to require a lot more momentum, a lot more volume, a lot more power and pressure to move through that level, right? To move through that level. Okay, so I don't need to sweat trying to get it to move through that level, right? So what I'm gonna do is I'm monitoring my volume and look at this. Right? Look at this. Right? When we're thinking of relativity, I'm looking at this. Relativity speaking, this is just way too. It's yeah. It's this is looking good. This is looking good. So I'm gonna sit here, be patient. Um, went to bed a little bit more early than usual last night. Like I probably went to bed like 8:45, 9 o'clock. I just was pretty tired. The move and really just the move. Thing kicking my butt. But almost there. Definitely a blessing being in a new place, a little bit further from work, but I didn't realize like just the average commute for for a worker is like 25 minutes, 22 minutes. So when I seen that, I'm like, okay, like I was in a very I was in a blessed situation. I'm still am in a blessed situation, but I'm saying when I was living by work, I was like 5 minutes from work, which was just a unique situation. So. Uh, love the change that has been recently made. Um, just to my living conditions, just because your environment is important. Environment is important. So that's kind of why I've been a little poor with my sleep. Uh, but let's see what Price wants to do here. I do see a decision-making level within there. Let's go up to the 15. Do see some decision-making levels in here. Right, I see two decision. Man, like I see actually, you guys know how I find my decision making levels, right? By now you should. If you don't, shoot me a message on Discord. Shoot a message in the Discord. It doesn't matter, but there is this information out there, right? Whether it's in one of our videos on YouTube, it's somewhere where I'm going over this, right? But I'll use this analogy and just follow along with me. All right, so Batman, right? Batman has a bat signal. And now when is this bat signal displayed, right? Now, this bat signal is displayed when Batman is needed, right? When Batman is needed, there is one signal, one symbol that goes into the sky that, police or people in trouble or somebody that's in need of Batman services. Right. So that bat signal goes in the sky and then it tells Batman a decision needs to be made. Right. A decision needs to be made. And that's exactly why I refer to these decision making levels. And the way that I like to look for these decision making levels, it is really similar to like a bat signal, like no kidding, right? Because it's one candle structure and it can happen two ways, but the meaning is it's slightly different, but the point of the meaning is the same, right? It only changes because I'll explain here in a sec. So this arrow right here, this arrow right here, and this arrow right here, right? They are all pointing to decision-making levels, right? The three candle structure that I'm looking at, candle one, right? Candle two, right next to it, and candle three right next to it, right? A three candle structure. One, two, three. What needs to happen with this candle structure? This has to be the smallest, and it has to be a different color than the middle one. The middle one is the oddball. It's always a different color than the front or the last, and it's always the second biggest, right? Then the third one is always the same color as the first candle, and it's always the biggest, right? Anytime you see that structure, that is a symbol, a signal of that level being an area where a decision will be made or a decision has been made, right? Because a decision can be made from that area or it could do what it did, right? A decision was made from that area to sell off, but then a decision, but then we return to that area, right? And then a decision had to happen again, right? A decision had to happen again. So it was generated, the decision was made, it sold off, it returned, it consolidated, and a decision was made again to buy. Before it was to sell, this time it was to buy, right? And this one specifically, why I said it's slightly different, this one was generated by sellers, right? Bearish. We can call this one a bearish decision making level, but I don't want that concept to get overused because it doesn't always matter if the bulls, the bears generated it because either one could use it, right? Either one could use it. But um, it is good to know that bears or bulls can generate their own. It is good to know that. But don't get so lost in trying to figure out is this a bull or a bear decision making level. Because what will tell you that is the candle structure. Like in this case, two bull candles versus one bear candle, right? This case, two bear candles versus one bull candle, right? And so why is this so important? Because this is the next area that I want to see price correct to before I enter a buy if I like a buy, right? If I like a buy, that'll be the next area that I want to enter at. And then I will look to take it to this decision making level. Because remember, I said 50 pips, I don't want to enter anything, right? And what is this entry? If I'm able to enter right here, what is that entry? 78 pips worth. I'm okay with that. I'm okay with that. That gives price room to breathe, right, against my decision making level. Um, and then it gives me a target to travel to. It gives me a target to travel to. But what I wanted to see here was coincidentally, this is this is money right here. Um, Banking numbers is something that I'm gonna spend a lot of time focusing on um, to improve my entry points because I want to enter as close as possible to banking as the banks do, as the institutions do, hedge funds, asset managers. I want to enter as closely to that price as I can, right? And it's going to be a clean number. That's just all a banking number is. Um, that's all from my current understanding. That is what I understand a banking number is. It's just a clean number. It's a number that institutions, hedge funds, banks, asset managers, those large companies, people handling, millions and billions and of dollars and whatnot. That is the type of orders that they feel are at just clean numbers, right? And so that is I want to make sure that it's not as cookie cutter as it sounds. That's why I want to spend a little more time diving into it. I've heard it for a number of years now, though. Um, like really when I first got into trading, um, like I was hearing institutional numbers, right? That was like 5 years ago. I was hearing institutional numbers, right? So I know they have importance. Um, and I've seen the areas that they line up at. It's just all too beautiful, right? I don't really believe in coincidences, right? Even if something like this, right? And for example, this candle right here, this is a news candle, right? This news candle opened at 146.508, right? So that means if we would have just entered at that banking number of 146.5, we would execute on that entire move. But why is there so much movement here? That's because of news. And ironically enough, on a news candle, the exact time when that news candle came out, there was a potential entry at a banking number, right? So you can see how those that lines up because this is institutions moved this. This is institutions gave the momentum to move price, right? So just thinking about, okay, did they market execute off of that? Probably not, right? Probably not. Most likely not, right? They put a buy order in right at 146.5, right? Which would have been right at the that's so crazy. It would have been right at the basically the open of the candle. Like we saw that it was point zero eight off. That's just so beautiful. So I'm moving forward because that's just so beautiful. Banking numbers are clean numbers. 148.262 is not a clean number. 148.2, clean number. I'm even partial to like twos, ones, threes, fours. I like fives and zeros. I like fives and zeros. But like six fives, like anything that is just like 147.503, not a clean number. 147.5, a lot better. 147.6, a lot better. Right? 147.7, a lot better. Right? Those are just clean numbers. Clean numbers is what I'm focused on, right? So let's see. I want to see how this acts here. Let's see how this transpires here. So I got a price above that. down. Check Finviz again. Plus 4.6. What did Finviz start the day at? Plus 4.4. So Finviz not cooking too much. Let's see how weak this yen is. Yen's still down. Where's my indicator at? Not letting me add my indicator. Whatever. Yeah, so I won't like any entry until we correct, just because it's too close to my decision making level. Too close to my decision making level. So I got gold. Love the way gold looks. Just broke below this 4 hour decision making level. Liquidity below it. Oh yeah. I love gold cells. Decision making level here, it might respect and then stop at which is about 75 pips away from its low. So that's fine. Plenty of room to move there. Uh, check the dollar. Dollar getting strong push, bullish, strong push, bullish from the dollar. Yeah, I don't love this entry yet. Would have loved it back here. Uh, but got on the call late today. And so because of that, I go from having a potential entry that is 74 pips away to 50 pips away. And now I just have to be patient. I get to be patient. So all good, no harm, no foul. Sit here and be patient. I'm still looking at MACD and the abnormality of where we're at right now. Like as far as our signal line, it just got a fresh green dot, but our volume is not there, and our signal line has no room to go. Our signal line has no room to go. And so I could definitely see this correcting. Could definitely see this correcting. Like I said, if it corrects anywhere in this level, right? If it corrects to this, I like 148.6. I like 148.65, and I like 148.5 as my entries. Excuse me. I like those two entry points. So if I get correction, I'm gonna be eyeing those two entry points. Now, regarding the FOMC meeting minutes a little bit later today, the Federal Open Market Committee. That's what FOMC stands for. That's where Fed Powell, Barkin, Williams, Yellen, that's where those speakers come from. Um, it holds significant weight due to its current economic landscape. Unlike past meetings, these minutes are being closely monitored for key reasons. Okay, so recent interest rate cuts. The Fed recently lowered interest rates by 50 basis points, bringing the federal funds rate down to a range of 4.75 to 5.0, right? Originally 5.25 to 5, right? That's the 50 cut there. This rate cut was largely or it was at 550 to 5, so that's the 50 cut. This rate cut was larger than many in a damn, can't talk. Go ahead and restart that. The Fed recently lowered interest rates by 50 basis points, bringing the federal funds rate down to a range of 4.75% to 5%. This rate cut was larger than many analysts expected, creating heightened curiosity about the internal discussions and reasoning behind this move, right? Investors are eager to see if there are signals for further rate cuts or if the Fed will maintain its cautious stance on inflation and economic growth, right? Economic uncertainty. The global economy faces uncertainties such as ongoing geopolitical tensions and slowing domestic activity in major economies like China and Japan. These conditions are influencing global markets, making this the Fed's policy decision even more impactful. The minutes could provide insights into how these factors are shaping the Fed's outlook. Upcoming inflation data with the U.S. Consumer Price Index or CPI and PPI set to be released later this week, which is Thursday. The FOMC minutes could give early clues about the Fed's stance on inflation control. Any signs of softening inflation or continued hawkishness will affect market expectations for future rate decisions. In summary, today's FOMC minutes are being watched closely because they could clarify the Fed's approach to interest rates in the face of economic uncertainties and inflation risks. This makes them more significant than previous releases. I heard you. Okay, that makes a lot of sense, right? So since we had got the rate cuts, right? Amid inflation and the economic uncertainty, the meeting minutes will provide a little more confidence to investors, right? Confidence to people like you and me, consumer confidence, right? Confidence to the businesses, right? Um, it will give us a read on, in terms of Thursday, how the Fed is looking at data, which data points, right? Are we focusing on labor market? Are we focusing on production? Right? Where is the primary data focus from the Fed? So we'll get that from the meeting minutes a little bit later today. Um, so yeah, I'm interested to see how that develops. Uh, it's also eye-opening to understand that things going on in Japan and China are affecting the US, are affecting like our economy. And like the Fed is looking at the global landscape and understanding the relationships that we have with trade partners, right? And where we get like a lot of our products from and where, countries get their products from when it comes to what we provide, uh, which is mainly just oil. I'm sure there's other stuff, like financial services, but oil, you know, um, being a really, really predominant one, right? So it's just interesting to know that like the entire economy, it just works together. It just works together. So not getting any crazy movement yet. And visits ever increasing from this morning. Time is it? It's 27. At about 6:30, you want to take a break here, step out, get some sunlight, just, get my body awake. Still, no coffee. No coffee at the new house yet. Still gotta go get the Keurig machine and my espresso machine. Well, not my espresso machine. Let me not hear my lady say that. Let me not let my lady hear me say that, I should say. Hmm, that's interesting. I don't really like that. It says FOM meetings themselves are now recorded for public viewing, but the minutes from the meetings are published and made accessible to the public. The minutes offer a detailed summary of the discussion held during the meetings, provide insight into the Federal Reserve's economic outlook, policy decisions, and future guidance. The actual deliberations and decision-making processes occur behind closed doors, and live recordings or broadcasts are not made available. However, after each meeting, the Fed holds a press conference where the chair addresses the media and public, and these are broadcast live. Additionally, the minutes are typically released 3 weeks after the meeting and can be accessed on the Federal Reserve official website. For today's minutes, you can expect them to be available later in the day, but not as a live recording. If you're interested in watching the Fed's announcements, the next press conference could be a better opportunity. Um, so, okay, so okay, I see. So they're not having a meeting today. This makes this makes so much sense. So this meeting on our calendar, this is actually distracting me. Let's do this. So this meeting on our calendar the FOMC minutes is actually from the previous month. So the FOMC meeting minutes, they're released 3 weeks after they're held, right? So that's good to know. Good to freaking know. Um, yeah, I did not know that, dude. I thought this was like a meeting that went on today, but these documents will summarize the discussions and decisions made by the Federal Reserve officials during their September meeting, providing insights into their views on the economy, inflation, and interest rates. So it literally it's going to give us more insight on why the 50 cut, and then more insight on the economy and how inflation is um, unfolding. Um, but it will also give us which data points to focus on. So I'm actually gonna be looking into that. What time did that say? 2 p.m. Eastern, so 11 is when it will be made available to us. It's about 6:32. Look at this chart real quick. Price correcting exactly what I want to see. I'm going to take a step outside and then we'll be right back. All right. I feel better. Justin. Good morning, Justin. Correct really quick. All right. Mm. Yes, yes, yes. This is what I was looking for. This is what I was looking for right here. This is what I was looking for right here. Because this FOMC meeting minutes is from a meeting from September 17th to September 18th, right? And the rates got cut on the 18th. I'm pretty sure the rate cuts got cut the 18th. They had their meeting. Tell me the date. September 18th. Tell me. Because I can't go find it on the Fed Watch tool. Okay. September 19th to September 20th FOMC meeting. You guys gonna make me really search for this. Thought it was on the 18th. All right, all right. I thought it was September 18th. September 18th. All right, so that makes a lot of sense. All right, that makes a lot of sense. Okay, so the Fed and the FOMC meeting minutes just provide additional clarity. The FOMC meeting minutes is from a meeting that took place September 17th to September 18th. They do not release this meeting minutes in full, unlike some of the other press conferences that we're able to view from Fed members. They summarize the meeting. They summarize the key points, which is kind of good for us because I personally like to listen to the Fed members talk just for forward guidance and kind of this that language, the verbiage that they use to signal certain things and whatnot. Um, but with this specific meeting minutes, it'll just be a summary of their meeting back in September 17th to September 18th. And during that time, that's exactly when the interest rates were cut. So we're gonna get really, really detailed insight on why the 50, and just as far as EI's economic indicators, what the Fed is paying the most attention to, um, which in turn will tell us what we need to pay attention to. Um, and I'm gonna be monitoring it because I'm gonna read over it because tomorrow, right? Tomorrow, October 10th, 10/10, we have heavy dose, right? So CPI and PPI tomorrow, right? Or maybe just CPI and PPI is Friday. Yeah, CPI tomorrow, PPI Friday with some consumer sentiment, right? So if I'm not in a hurry to enter anything today. I'm not in a hurry to trade today. If I get a clean, if I get the entry I'm looking for, I'll enter. It hasn't corrected like I want it to. And the higher it goes, the closer it gets to my decision making level. And I'll look to if maybe an inverse VXT play is there, I'll look to sell off of this decision making level. Ideally, I want to see it correct back around to this level so I can buy from this level. But if not, then I'm not in a hurry. And the beautiful thing about trading is we don't have to be in a hurry because there are so many factors that can influence price more than just like taking the technicals and just living with that, right? And that's not to say that I didn't have an entry this morning. I just woke up late, right? So um thinking about risk management, if I wake up late, I don't need to enter a trade just because I see it trending up, right? Because this was actually a really clean play. I would have loved to take this entry back here. Um, I get on the calls, my screen at about 5 usually. I'd say like 70% of the time I'm on here at 5 a.m. I'm looking at the chart. So I would have liked entry in this level. Like as it starts to move in this level, I would have looked for my institutional number, right? So let's see where we're at right now. 148.65 is the one that I would have liked. So if we could get a touch on that at all. Nope, no 148.65. So the next one I'd have liked is 148.75. Yeah, so that'd have been a good entry right there. 148.75. Stop loss. I would have loved this entry this morning. All right, and then just take it to that decision making level. Right. But since I got up about right here. I got up like right in here. So not too far off from my initial potential entry point, but now this is 57 pips to my decision making level. So just logistically, it's a little different for my entry. So I just didn't love it. And if I don't love it, I don't take it because I have taken it when I have not loved it and it's hurt me. Because remember, I said our mind is a magnet. Our mind is a magnet, whether we want to accept that or not. If I enter a trade and I assume when I enter that trade that it's going to be a loser, there's a pretty good chance that it's going to be a loser, right? So whenever I enter, I never think it's going to lose, ever. I never enter a trade like, ah, that one might be a loser. I have entered a trade where I'm like, ah, I don't love it. And that is what I want to stay away from because there in my mind, there are an infinite number of trading opportunities, right? Unless I'm dead or I have brain damage, right? There's only two things that could take away my opportunities to enter the market. So I can be as patient as I want to be, um, but not hesitant, right? We don't want to confuse patience with hesitation or indecision. Um, we don't want to be indecisive. We want to be the reason I'm not entering, I want to have a reason for it, right? Like I want to be able to control how I engage with the market and not just say, oh, I don't know what the market's doing, so I'm just not gonna do anything. Like I don't want to be there, right? And that doesn't mean I need to know every single thing about the chart or that I'm trying to know every single thing about price action. I build my sentiment based on how I create my story. I create my story by the MACD. I create my story by the cloud and the information that the cloud displays given its data. And that's on my lower time frame. And then on my higher time frame, I use macros, right? Economic indicators, GDP, PPI, CPI, employment, right? Consumer sentiment, right? Those type of things on the macro scale that influence my long-term look, my bird's eye view look at the market, right? And so looking at my bird's eye view of the market, I'm running into a decision-making level, right? I'm running into a decision-making level. However, I do see on my MACD, we're gaining buyer's volume. Potentially. It hasn't showed itself yet, but I can see the potential is there because we've lost seller's volume, right? And this is on my bird's eye view, right? So think about that, right? I'm gonna just use these two time frames. I'm looking at the 4 hour where it's showing you that I'm running into my 8 hour decision making level. I'm looking at my MACD that is showing us that buyer's volume is potentially coming in because we see that sellers volume has reduced, right? So we can make the assumption based on what the indicator presents that this is indicating that buyers are potentially stepping in, which we get that validation that buyers are stepping in the moment we get that weak sellers bar here on our MACD confirmed with bullish candles, right? Confirmed with bullish candles, right? And so now what am I looking at? Okay, then we're just looking at our 5 minute, right? We're looking at our 5 minute. What am I seeing on my 5 minute? I'm seeing we're really close to my decision making level already, right? And so that's why we can't get tunnel vision on one time frame, and we can't get tunnel vision on micro aspects versus macro aspects. We have to have a complete, cohesive outlook of it all, because if we don't, we're gonna miss something, and it's gonna make us susceptible. Right? It's gonna make us susceptible, and put our money at risk only because of the under, or should I say the lack of complete analysis, complete analysis, um, and so oops, I don't know what just happened there. And so what does that mean? Let me turn on some music real quick. Something just came out. All those sell inventories. All right. So what am I looking at? What am I looking at? What am I looking at? So we just talked about the 4 hour. We talked about the volume that the MACD was talking to us with. We talked about the area that we were moving on. And now I'm looking at my 5 minute. I mentioned the 50 pip radius that I don't like to trade through my decision making levels. But understanding that I just want to be able to just continue to build a story. Just continue to build a story because, once I can build a story and I understand the story, I just know how to involve myself. I know where to fit within that, right? I know where to fit, how I like to execute. Um, I know how to manage my risk within that story, and just all those different aspects that involve, just being aware of what is going on, right? And not just saying that this is just candles and movement and corrections and accumulation, distribution, all these different specific concepts that regard price action, but how, why, how did it get there? Um, and so as we move on this 8 hour decision making level, I love it just consolidating at this level more and more. Um, and since the signs are pointing towards us going bullish on UJ, the signs are pointing to that in terms of the higher time frame, just strictly looking at a technical on a technical level, right? We got inefficiencies above it. We got decision making levels, right? Decision making levels, liquidity. So there are target areas, and just thinking about the state of the dollar versus the state of the yen, the dollar is stronger than the yen right now. Friday There is it's I look at it as like a consumer confidence, not consumer confidence reading. It's a reading on the confidence in businesses from Japan. So where's that folder at? Where's that folder at? I know I'm not seeing things. Oh, it came out yesterday. Nice. Okay. So the Reuters Tanking Index that came out yesterday. This is like the this is a reading on businesses and how businesses feel about their economy. So 200 manufacturers and 200 non-manufacturers, just to provide business circumstances if they're poor or if circumstances are favorable. And this is an early indication for the Bank of Japan's quarterly Tankin Index. The monthly numbers are published every 2 weeks. So what this is saying to us is that there are some increasing confidence. There's some increased confidence within the business side of JPY, which can bring some value to their currency. But I don't think we have seen that yet on the JPY. So I've not seen that yet on the JPY. But that's just something to consider. It's something to consider. Like, okay, maybe um the yen is finding its foot, right? And so just as we move on to this level, um, this decision making level, I'll look to see how we react from that level. 23 minutes left on this call today. All right, still just staggered off there. Gold moving downwards, but moved on to that decision-making level that I mentioned earlier. All right, so let's see how it reacts to that level. That's a good level there. Not to mention this decision-making level, but this decision-making level, this decision-making level, this decision-making level. Right. So 4 decision-making levels in one area, right? Strong level, strong level. Inefficiencies left above gold, right? Definitely we look to see that get filled. Right. Maybe not today, but just thinking about news, that is where it all comes back to. Macros. It all comes back to news. It always comes back to news because that's what helps us move. That's not only what helps us move. I was watching a video the other day. I was watching it last night, right? And they were talking about the different ways people utilize trading, right? Specifically Forex, the different ways. I'm gonna find the video and I'm gonna pull it up for you guys to go watch on your own time. Um, ah, dang it, which one was it?
The major fund, major currency pairs historically, and that's over 50 years of data. So it's pretty significant. What I would say is split up your
No, I'm gonna find it. Basically, what they were getting at um was this one right here. This one right here. Found it. Found it. I have to show you this one. We're gonna watch this video. We're gonna watch this video. I'm gonna pull it up. We're gonna watch this video. Share my audio.
Your future is at your fingertips.
This video, the main point I want you to pull from this video is who involves themselves with the Forex market and why they involve themselves with the Forex market. And that will start to clear it. When I listened to this yesterday, it cleared something up for me in terms of just my thoughts of like institutions and banks. Like, and then when we think of something like imbalance, right? Inefficient price action and the need for price to be balanced, right? We think about Forex. Forex is a global market, right? Everybody uses Forex, right? If there's a very wealthy person in Japan, right, and they're in love with Nvidia, the stock Nvidia, right? They have to convert their Japanese dollars to US dollars to purchase a US stock. For them to be able to even do that, they have to use the Forex market, right? So this is a global market, right? Um, I'm gonna look up something real quick, and then I'll come back to that video. This is really interesting. I'm gonna come back to that. Let's listen.
Who are the big players?
In the currency market?
Yeah.
The big players will be people who have to transact billions, if not tens of billions of dollars. And so you can imagine that'll be pension funds who have overseas investments, insurance companies, asset managers, big asset managers like Fidelity, central banks themselves. How does a central bank intervene? Well, yes, first it can intervene in the market to maintain domestic currency in a particular bank, but each central bank also holds reserves. They don't just
This is really good right here.
hold their own currency, they hold lots of other currencies. A lot of central banks have mandates that each reserve can only be a certain percentage of the total. So then if the value of a particular reserve goes into excess for whatever currency fluctuations, then they have to reduce it. And so you have all these big players, what's called real money. People are doing physical transaction of cash, not just speculators who are sitting there on the screen and doing this computer calculation, but people are really physically transacting cash. And so those are the big players that are moving money across borders.
So the question that I have here is, how can I compete with the big banks? But I guess, are you competing?
Remember, I want to trade like a bank. When I enter the market, I'm looking to enter as close to what the banks and institutions are seeing, as close as possible, right?
Do you want to compete?
It's a very good question. Are you competing? So a statement is made about the futures in the FX markets, and people tend to say that's not true for the equity markets. And they say it's a zero-sum game. So within the equity space, people say it's not a zero-sum game because if I buy this share in the company's value somehow increases and creates value for me. Whereas in the future, the only way to make money is because the future, as it's novated from the exchange when I purchase it, versus the seller, I have some seller behind me I don't know about because it's all kept anonymous, but as I make money, the other guy has to lose money. And so the same thing to a certain extent is true for the FX markets. So then the question here is, if it's a zero-sum game, by the very definition of zero-sum game, I'm competing with somebody else. Now, let's look at the word game. Game actually implies that we all have the same objective. So when you play Monopoly, everybody's got this objective to accumulate all the money, all the hotels, and make everybody else bust. But within the world of FX, not everybody has the same objective. So as we said, central banks have an objective of maintaining, due to law and mandate, a certain percentage of the reserves and they don't care about the fluctuation of the currency. And a classic example is the Swiss National Bank that wants to keep the level of the franc at a certain level. It doesn't care about fluctuations. It'll just print.
Let's listen to this again. Let's listen to this again because is this is the reason why macros are so important. This is the reason why macros are so important. Macros help us understand economic balance, monetary balance.
An objective of maintaining, due to law and mandate, a certain percentage of the reserves uncertain. They don't care about the fluctuation of the currency. And a classic example is the Swiss have an objective of maintaining, due to law and mandate, a certain percentage of the reserves uncertain. But within the world of FX, not everybody has the same objective. So as we
Okay.
said, central banks have an objective of maintaining, due to law and mandate, a certain.
What is the central bank's mandate? What is the U.S. central bank's mandate, dual mandate? Maximum employment and price stability. Price stability, not price increase, price stability, right?
Have an objective of maintaining, due to law and mandate, a certain percentage of the reserves uncertain. They don't.
Because of that price stability, there is a mandate that each central bank has to where they must maintain a certain amount of reserve holdings to make sure price is stabilized.
Care about the fluctuation of the currency. And a classic example is
They do not care about the fluctuation of the currency, of the actual price of the currency, right? Because the Federal Reserve holdings is so important.
the Swiss National Bank that wants to keep the level of the franc at a certain level. It doesn't care about fluctuations. It'll just print francs and buy and sell the stuff, and ultimately it'll post a loss, it'll post a gain, but to them that's not necessarily as important. It has secondary political resonances in Switzerland, but they have a different mandate, a different goal to follow. Or for instance, if you have a corporate that tries to hedge cash flows 12 months out.
Think about the two different objectives here from the central bank and a large corporation, right? Corporations, they're trying to profit. They are trying to increase their like exactly what he's saying right now. If they're thinking about their capital 12 months out, they may be looking, they may be more concerned about short-term fluctuation, right? Listen to this.
In Switzerland, but they have a different mandate, a different goal to follow. Or for instance, if you have a corporate that tries to hedge cash flows 12 months out, will they be concerned about short-term fluctuations? So because people have different objectives and different time frames, it can be that one such objective and time frame will provide profit opportunity over the shorter time frame. And so
Yes.
it's this what you'd call heterogeneous kind of mix of agents, everybody wanting different outcomes, that allows you to find a niche that at some point in time is profitable, but for somebody else is profitable as well because he's got a completely different outlook or has to meet completely different objectives. P&L is not necessarily the only thing that people look at when they transact in the markets.
Yes. P&L is not the only thing that people look at when they transact within the markets, right? It may be what we focus on because we have a different objective as traders. We have a completely different objective. So I used to have the type of mindset of like, man, I need to trade against the banks. But that's not the case at all. I need to trade with the banks, right? And I can't really trade with the banks because they have a completely different objective. They have a completely different objective than I do. And so what does that mean, Marcus? Why does that even matter? Why are you even telling us that? I'm telling us that because we can build our own story behind price with understanding that the value of the currency it only matters to us. It doesn't really matter to central banks because what matters most to central banks is how they're it what matters most to central banks is the amount of holdings in their reserves to promote price stability, right? That's the point. That's the point I'm trying to get at. We can analyze our central banks, and specifically in the U.S., we can analyze their reserve mandate, and how their reserve holdings line up with that mandate, and how that promotes price stability. Um, but when I'm looking at the chart and I'm seeing stuff like areas of imbalance and inefficient price action, I would be curious. I want to start piecing together. Okay, how is the imbalance created? Now I know it's because sellers or buyers, you know, dominate a specific level of price. But as we're seeing from that last video, it's a little bit deeper than that, and that's kind of what I want to get to. But the main point of that video was to just understand the multiple objectives that we have within the forex market, between you and me, between corporations. Corporations have a different objective than like central banks. Central banks are on a completely different spectrum than corporations and people like you and me. And now on the higher scale, with central banks and those billion-dollar companies, maybe they line up a little more closely because those billion-dollar companies and private investors and whatnot, they can help promote price stability. But outside of that, there is I love what he said about the zero sum game, because I've heard that time and time again. Like when you're selling here, you're taking money from somebody that's buying, right? And kind of puts you in a situation where you are left with the unknown, because like, okay, if I'm selling right now, that means how many people are going against me that are buying? Where are they buying at so that I can get out? Right? That's how, you know what I'm saying? That is not it. That doesn't what's the word I'm looking for? Like that is not, like, the zero sum game is not it. Like, it's not true, right? Because you, as a retail trader, you don't have the ability to take money from me because you're not trading enough. You're not putting enough money in. Like, you know what I'm saying? You're not influencing my trade. You know what I'm saying? Like, it that's not it. Rather than what that individual just mentioned. I'm not even sure who that guy is. I didn't really look at that. Let's see. Corvin Cor Cord Cadurla? Corbin Cadurla. Ex hedge fund manager, right? Ex hedge fund manager. I'm not sure which hedge fund he was managing, but um, as we heard from him, the different objectives of people like you and me, corporations to large, billion-dollar, small corporations to large corporations, small hedge funds, large hedge funds, private investors, and then to central banks. Everybody has a different objective. So it's not so much a zero sum game. And based on that, right, we can is another reason why I like to build my own story, my own sentiment, right? I utilize articles, right? I'll utilize that stuff, but I would just use it to move to the chart and then speculate how I perceive that information. And most of the time, the articles, like, I'm able to find out why the person, the strategist or analyst in that article is saying certain things. I'm able to figure out based on my own outlook of the market and how I look at the market and want to execute on it, and the story that I build from it, right? And so that's a yeah, that's I loved that video. I'm gonna just watch a few more. I've just been kind of watching things like that every single day. Just try to learn more about these hedge funds, and big corporations, and how they involved in the market, the things they're looking at to involve themselves in the market, the different things that I can monitor on how
their involvement, whether it's in banks or large corporations, and just how that fluctuates. It's just really gaining more insight, psychological insight, not so much technicals, really just that additional, like I said, psychological insight on market movement and just participation from the other players within the market. So, but what we're seeing here is a beautiful play that I would be in profit if I would have kept my trade from yesterday and allowed it to go correct against my trade a little bit. But it's fine. I still profited yesterday. I'm only saying that because this speaks volume to exactly kind of what I'm getting at, right? Like just the story that we build and execute, that's what matters most. Now, make sure you're building your story on a solid foundation and a consistent one and something that you've back tested and you've confirmed like, okay, that is how I want to build my story. I don't build my story differently every time. I started with the same way, right? I start at the top. I start with the top down analysis, right? Once I get to the 1 hour, I look at my macros, right? On the way from that top down, I'm looking for inefficiencies in price, or FVGs. We'll start to call them fair value gaps. That's a little more of a common term, so you guys probably see that more. I like inefficient price action because it tells me it tells you exactly what it is. It's an area of price that lacks efficiency. Something that lacks efficiency needs its opposite to be efficient, right? So in this case, with this orange box sitting above price here, this is an area of inefficient price action. And who has to come in within this area to make this an efficient level of price? Buyers, right? So that's why it's referred to as that. So whether it's inefficient price action or fair value gaps that you've heard, that is when I'm starting my top down liquidity, inefficient price action are two things that I'm looking for, as well as decision making levels. I'm always looking for decision making levels, as there's a ton of news coming out, and I just think it's all these low impact folders from today. Some of them might influence the market, like crude oil stocks change just with things going on over there in the Middle East. So we see this was a worse than expected result. So that will hurt the price of oil, which will probably then hurt the value of the dollar. Because what this folder is saying, let's pull it up. I know I looked at this folder yesterday. Yeah, so what this is saying, the reason why this number is negative, what was the one from yesterday? Crude oil stock change. You're being slow. Crude oil stock change. Okay, so what this is measuring is just how much oil inventory is on hand. And so since this number has increased, that is going to hurt the value of it's going to hurt the value of the dollar, because it's going to decrease the price of oil because of how much there is, right? So this number has gone up, similar to yesterday. And so this is something that ChatGPT helped me understand. So a build in oil stocks suggests that more oil is being produced or imported than is being consumed or exported, which can lead to lower oil prices due to a surplus. Conversely, a draw indicates that a consumption or exports are outpacing production or imports, which can lead to higher prices due to a supply shortage. So right here, this is not a supply shortage, right? And what we're seeing today is not a supply shortage. It's too much supply, which is going to hurt the value of oil. And if you know what oil it is valued in, it's valued in dollars. So if it hurts oil, the value of oil, it could impact the value of the dollar, right? I said it could. I'm not saying it will or it should. I said it could. Um, and so as gold just moved on this 30-minute decision-making level, I'd like to see how it reacts to this level. Like I said, an area inefficient price action above it, or fair value gap as well. Just playing this forward and thinking about, so gold, we know gold's been on a tear, on a bullish tear. We know that there's a lot of things arising over in the Middle East with the things going on with Iran and Israel, right? And so we know that gold is a safe haven for investors, right? We know gold is, it's one of the main ones that, people buy once they don't know where to put their money. And with that being said, understanding that the meeting minutes comes out a little bit later today, which will give us a little more insight on why the Fed cut the rates 50 base points, the outlook the Fed has on inflation and the economy going forward, right? Now that we're 3 weeks after the interest rate cuts, right? So you can start to see why this meeting will have larger impact. And I'm starting to see it because I didn't a couple of days ago. But I'm starting to understand, okay, this meeting does have a little more significance than previous meetings because not only did a lot happen 3 weeks ago with the interest rates being cut, but a lot has happened since then, right? Since then. And so um just playing this forward, knowing where on price, specifically on gold, because gold helps me understand the potential direction the other pairs and currencies can travel just because it has so much dominance and attachment to the dollar, right? Attachment to the dollar. And so and that safe haven type of mindset, type of relationship that gold has, it kind of makes it easy for us to interpret what is going on, what could go on, not easy, but simple of what could go on, right? And so understanding all of that, I'm gonna look for there to be strong bullish data for the dollar, or excuse me, bearish data from the dollar. Like I want to see confidence reduce in the dollar when these meeting minutes come out. And then along with CPI and PPI, employment tomorrow, labor market conditions and stuff tomorrow. Um, that's so we got labor market, unemployment claims, CPI tomorrow. Friday, we have PPI and the consumer sentiment. And so with these next 2 days, I don't trade Fridays. But specifically tomorrow, my approach, if I see bearish news on the dollar, right, I'm gonna like buys on gold, and I'm gonna like sells on USD JPY, right? That would work really well because of that taking an index from JPY. It was 1 point above its consensus, which meant that businesses, both manufacturers and non-manufacturers, um, are seeing confidence in their economy on the business aspect of things, which contributes to the productivity aspect of things, right? Because If businesses are feeling good, that means their workers are happy. If their workers are happy, that means their workers are producing. If their workers are producing, that means people are buying. If people are buying, then more workers are producing. And the more people are buying, the more the workers are earning. And it's a constant cycle, right? You know, the more people buy, the more people earn, right? And that just productivity will scale up, right? Will scale up. We know the JPY, Bank of Japan, they just got a new prime minister, right? So they've been looking for some confidence after that change, right? They have not cut interest rates. They held off on that, right? So they're looking to bring value back to their yen. That is, from my perspective, that's what I'm saying. They're looking to bring value back to their yen, right? And so understanding all of those factors, if we get bearish news tomorrow from the dollar, that's what I was doing actually. Bearish news. So we're looking at nothing but red, right? So if like the consensus on this is job claims increased by 4,000, right? Jobless claims increased by 4,000. A 4-week average jobless claims increased by like, 7,500, roughly 750, or, just not significant from previous to consensus. Like they're not seeing a large change, right? 5,000 isn't a large change, right? CPI, look at the CPI, core inflation month to month. They're seeing that has reduced, right? So these, right? Let me do this because I tried to circle that. Let's do this, and then I'm gonna go ahead and get off this call. I just clicked on it again. Annotate, annotate, annotate. It's not letting me annotate. Okay, here we go. I'll do shapes. So these right here. Boom. Right here. Right? Look at these. I don't like the way that looks. Right? Just focus on those though, right? Do, 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 do. All right, focus on consensus, previous, right? Consensus and previous. Not too far off. Not too far off from each other. From previous month to what the consensus speculation based on data, right? Based on data. But look at the inflation rate. And so reverse really, really quick, reverse, reverse, reverse. These going upwards, especially these three, is actually not good, like on paper. Like we would look at this as, oh man, we're getting more jobless claims. You know what I'm saying? Like on paper, that would actually not be good. However, it not being, why does that keep saying that? However, it not being completely far off from the consensus, if the actual result comes out, anything close to the consensus, I won't think it has a negative impact on the dollar, right? I won't think it does. My perspective, I don't think it will. However, because we have core inflation rate month to month, inflation rate year over year, core inflation rate year over year, and inflation rate year over year, these next folders are kind of going to be the key, the determining factors for price and how I'm going to view the future of the dollar, right? Just with the data given on tomorrow, like my approach for the market tomorrow is dependent on these news folders. And so with the consensus reducing for the inflation rate month to month, I will see that as positive for the dollar. Um, However, the main point behind this is let's pay attention tomorrow to the consensus of our employment claims because all these folders come out at the same time. So what's going to happen tomorrow, and I can almost guarantee this, at 5:30, we're going to get some insane movement. Like spike is going to go in one of two directions, right? But it's after that initial spike that it is when we will get the true movement. And that's not to say that initial spike is an insight to true movement because it could be, it very well could be. There is times where we get that initial spike, it corrects slightly and then continues in the direction of the trade. Um, but with employment claims in the labor market holding so much weight, that will be the initial result we get. So let's just monitor its consensus. Excuse me, let's monitor the actual result versus the consensus. If the actual result comes out either significantly higher or significantly lower than the consensus, let's combine that with whatever comes out for our inflation. But let's not go against inflation, okay? I'm personally not going to. I'm not going to go against inflation. Because ultimately the only reason why the rates got cut was because we were looking to stimulate the economy. That is one of the main reasons, and which is why at 11 o'clock I'm gonna love to get into the summary of the meeting minutes, which will be really important for tomorrow as well. So I have more insight tomorrow morning before this stuff comes out. I'm gonna get on the call at about 5:15, right? Just to give us that time prior to I know the calls normally go live at 5:30. I'm gonna get on 15 minutes before just so we have that time to address meeting minutes from yesterday and then see where price has moved and find decision making levels. Maybe even a little bit before that. Uh, I'll look to get on, but definitely by 5:15 to build this story out for how we can execute tomorrow. I'll be putting some more funding in my account tonight. So I had a bunch of change, right? Just sitting in this. I like this thing that my lady's grandfather made, and it had just a bunch. I had a bunch of change in it, and I would just be. It's probably like couple years worth of change. I just went and dumped it in on one of those things, I like Fry's or Walmart, got about $43, right? So I'm just gonna go ahead and put some more funding in my account, and just to increase my capital as I look to get to 1K by the new year, but then just to allow my account to be able to absorb more drawdown inside of my risk continuum, right? Thinking about that continuum. So as long as I'm comfortable with my risk, I'm okay with going into drawdown if I have to, because it's inevitable. But I just want to have proper risk to be able to absorb drawdown and not only have the capital to say, okay, just because the trade's not going in my direction, let me just sit in it until it does. That's not what I'm getting at. It's not what I'm getting at. So tomorrow it should be a really good one. I didn't take a single trade today. I didn't take a single trade today. I didn't love anything, right? I didn't love the way anything looked. I love the way UJ started out. But as I told you, I don't like to trade when I'm getting closer and closer to decision-making levels. This trade, so I entered a trade yesterday at about 5:31 a.m. Today's 5:31 a.m. I entered a trade back here. 5:31 yesterday. it corrected against my position a little bit, right? Here, I held, and then it was somewhere around like this level where I moved my stop to where it kept me in profit. And then once it moved below that, it took me out. But as you see, this was my entry, my play. It was to enter here and to take it to this decision-making level. And just the way that ended up playing out, so beautiful. Let's look at 531. I just want to see how many pips this was. 531 on this entry. You're talking 105, 108, right? Clean, 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 clean there. I would have liked to stay in this entry had I had a little bit more funding in my account to allow a little bit more drawdown to be absorbed. But since I already went into profit, I'm trading with an $18 account right now, right? I went into profit about $3, right? So you're looking at about 20% of my account roughly, right? Make sure I'm doing my math right. Yeah, about 20%. It ended up correcting, stopping me out, and I secured 96 cents, right? But that's 5% of my account. So I'm all good with that. Had I been able to absorb a little bit more drawdown, the thing I'm not trying, what I am staying away from is thinking every dollar in my account needs to be at risk. And it doesn't need to be. It doesn't need to be. So yeah, that was phenomenal there from USD JPY. And I could speculate a few different reasons why um, the UJ didn't move, in its bullish direction. I mentioned last night, we have the Tokyo session. That's when JPY tends to show itself. And then if we go over to Mativ and we just look at JPY's individual movement, just by itself, we can see, that it hasn't had strength. It hasn't had strength. And so this red line, this is the baseline here. This baseline is going to read 26 periods of price. So it's going to read basically the last 26 hours of price, right? And so we're seeing that, sellers have been still in control of the yen, and it's been holding it downwards, which is why we were able to get some bullish movement this morning from UJ. Like I said, the only reason why I didn't execute this morning was because I woke up a little bit late, and then I didn't need to force it. If I wake up late, that's on me. That's my fault. I can, deal with the FOMO of being indisciplined, and not waking up at the time that I should have woken up. But at the same time, I need my sleep, guys. I need my sleep. But yeah, so that is gonna wrap it up for today. Bloom CEO Marcus, EHM Trades. We'll be back tomorrow. I will send an announcement in the Discord. 5:15 for sure I'll be on by. I'm looking to get on by 5 a.m. though. And since I was a little late today, 5 a.m. 5 a.m. sharp. You guys will see the live stream going. 5 a.m. sharp, you'll see the live stream going. So we'll see you guys tomorrow. Let me do this really quick. So we'll see you tomorrow at 5 a.m. Right? We're gonna go over the meeting minutes. We have to go over the meeting minutes. We're gonna go over that in the morning. We're gonna build our story for what price could do if we buy or sell. And then we are going to be ready by 5, like that. By then we'll be fully dialed in. By 5:30, we'll be ready to see consensus versus actual for labor market, inflation, and all the good stuff. But other than that, like I said, that's pretty much all I got today. Let me go make sure that I didn't miss anything on the YouTube channel. I need to be better at that, actually. All right. Justin, appreciate you hopping on. Always a pleasure, sir. But like I said, we will be back. Oh, just really quick. Just really quick. The Forex market being a global market continues to be confirmed and validated for me. Goldman Sachs was created back in 1869, right? 1869. There was an individual I was watching yesterday, an ex-Goldman Sachs trader. He used to work for Goldman Sachs, started at the age of 16, because he introduced himself to trading. I believe at the age of 12. Um, Maybe I'm getting my years slightly off, but basically, um, the point is this individual, he grew up in Liverpool. He grew up in Liverpool, and we know that's not in the United States. Um, but Goldman Sachs is back in 2021 and they're probably definitely still up there as one of the most traded um companies and corporations, investment banks in the world, right? And we're in 2024. But this is a US company that, you know, clearly outsources their employees outside the country, right? And I think about stuff in a practical way with that because like US company, we're dealing with somebody that is not a part of the US in terms of, you know, that we're hiring to trade for us, right? And so continuing to just bridge the understanding of Forex being a global market. Every market utilizes Forex. And I continue to get that validated as I just listen to somebody talk, and then, draw the comparison of, oh, wait, it's a US company. This person started trading outside of the US. A US company targeted this individual to come and produce for them. So thought that was interesting. And I just wanted to share that before I headed off here. But I'm going to go finish up some moving at the old house today and then get to work at 12:30. But like I said, tonight and tomorrow I'll do some prep for the call. Tonight I'll do some prep for tomorrow's call. And then I got some other work to do as well. But appreciate you guys hopping on, and for everybody that tuned into this live this morning. Bloom CEO Marcus, EHM Trades. If you haven't gone over to our Instagram, our biggest announcement yet came out on Instagram, right? Just a little sneak peek, right, of things to come in these next 3 weeks. Could not be more focused, as well as excited, but this excitement is really it is directed just towards my personal successes in trading, but then bringing as many people along with us as we can, and making this as simple as we see the market and helping others see it in that same simple way. So other than that, Bloom CEO Marcus, EHM Trades. I hope you guys have a